Hey, what's going on everyone? It's Griffin here and I hope you're all having a great day as always. Now, in today's video, we're going to be speaking about 3 stocks that I am currently watching and looking to buy into during the stock market dip. With everything that's going on right now with GME and other hype stocks that are pretty much absorbing all of the investor attention, well, on the sidelines, we're seeing some pretty hefty discounts on some quality stocks that I see showing great potential for buy-in opportunities right now for a mid to long-term hold. As of close last week, my portfolio is actually down quite substantially, and I want to capitalize on this recent stock market dip to buy into more companies I am either currently holding or some new and interesting companies that I see showing great growth potential over the coming 5 to 10 years. This is actually something that I speak about in my stock market investing course, where I actually rarely buy on days when the market is trending green. Rather, I pretty much only buy stocks and ETFs, other positions, when the stock market is trending red. And the reason for this is because this gives a larger gap after I've done a proper analysis of the company and I'm confident that they're going to do well over time, where I can go ahead and purchase into this company at say 3, 5, 10% down, which will allow me to materialize larger gains over the period of time that I hold that position. So anyways, last week I released a video covering 3 stocks that I currently hold in my portfolio and that I wanted to give you all an update on. Make sure to check that video out if you haven't already, but I also wanted to give you some further updates on a couple more companies that I either hold in my portfolio or that I'm looking to buy more shares of during this stock market dip. So with that said, let's get right into the video. As always, if you're new to investing and you need to open up a brokerage account, make sure to check out the links down below to resources I use and recommend. And for a limited time, you can get $25 when you open and fund an account with Wealthsimple Trade. Alright, so jumping right into the first stock of the video, this is a company that I've personally been a shareholder of for over a year now, and I've actually also featured it on the channel multiple times, but at current stock valuations, investors have mixed opinions as to whether or not this stock still has a substantial room to grow in the mid to near future. I honestly haven't seen many investors speaking about this company lately, but I wanted to share my thoughts on Shopify, ticker SHOP, on both the TSX as well as the NYSE. Now, at the time of filming this video, Shopify is trading for right around $1,394 per share on the Toronto Stock Exchange, obviously in Canadian dollars. Definitely not a cheap stock by any means, but let's remember here that on a relative basis, the actual share price isn't of much importance because it's a reflection of the stock's float. I'm bringing this company up though for 2 main reasons. The first one being that Shopify is a dominating player in the e-commerce space, has been for now over a decade, and continues to dominate the single shop e-commerce space, which is doing nothing but continue to grow at an exponential pace and will have no slowing down in the coming years, which has been even further propelled by the virus. The second reason is because even though this is a stock considered to be extremely expensive from a price to earnings standpoint, this is a growth oriented company that isn't concentrating on creating a massive bottom line. Rather, this is a company that's looking to reinvest all of their earnings back into exponential growth and expansion of their operations. By the way, if you aren't entirely sure what Shopify does as a company, they essentially offer e-commerce businesses an all-in-one platform to host and create their online shop with hundreds of plugins and other services that merchants can use to complement their shop and fulfillment of their products. They make money from recurring subscription revenues on a monthly basis through multiple different tiers of service and therefore price point, and they also make money through payments processing through what they call Shopify payments. Shopify is honestly the best all-in-one e-commerce platform for one-off e-commerce shops, and what I mean by that is a shop that's going to have their very own storefront on their own website instead of, say, a company that's going to sell their products exclusively on Amazon, which is an all-encompassing platform that's not going to have your very own branding. So Shopify now has over 1 million merchants that use their platform on a monthly basis, and these include massive companies like Fashion Nova, Yeezy, and Kylie Cosmetics, just to name a few. My point being here that their product offering is pretty much unparalleled on the e-commerce space, and for this reason they have an extremely low turnover rate of merchants once they've initiated their website through the Shopify platform. Now, from an actual industry standpoint, e-commerce is still very much at the forefront of long-term growth and expansion, where companies like Amazon and Shopify are going to inevitably absorb a very large market share of retail in the United States as well as worldwide. In fact, in the second quarter of 2020, e-commerce accounted for roughly 14% of total US retail sales, which was up quite substantially from just a year prior, where this figure was sitting at only 11%. And looking at this chart, we can see consistent exponential growth in the e-commerce side of retail sales worldwide, expected to reach 6.5 trillion by 2023. All right, now back to Shopify. Let's speak about some growth figures because after all, this is what this company is all about. So revenue growth has been fantastic in the last year for Shopify, posting 97% growth in both Q2 and Q3, with monthly recurring revenue up 47% last quarter, which is stellar growth. And with this in mind, I honestly think Q4 2020 will post revenue in excess of 70% growth since same quarter last year, considering this year's Black Friday and Cyber Monday, which was mostly online this season. Revenue growth year over year has been fantastic as seen from this chart, and the trailing 12 months revenues are 2.080 billion, but I expect the 2020 figure to be more in line with around 2.4 billion for massive growth year over year, fueled by the virus. Shopify's balance sheet is also fantastic, no red flags whatsoever. They even have enough cash and short-term assets on hand to fully cover the entirety of their debts and become a debt-free company if they so wanted to. Taking a quick peek at their stock chart, well, as mentioned, their stock has been trending sideways for the past 6 months or so, with current prices 15% below the 52-week peak. Actually, if we draw a support line on the stock movement, we can see that the chart is following this support line where it should bounce off and continue rising in 2021 following Q4 earnings if they are as great as I expect them to be. Finally, for Shopify, let's see what ARK's been doing. And you'll notice in my recent videos that I've been referencing ARK Invest's buy and sell orders for given companies, especially for a company like Shopify that operates in the e-commerce space and is a very forward-looking and innovative company. For this reason, ARK Invest's opinions on these types of companies is definitely a nice reference point. So yeah, as we're seeing, they have been steadily buying shares of Shopify since November of 2020 and have been doing so in relatively large increments across a handful of their major funds such as ARK-K, ARK-F, and ARK-W for weights of around 2% in each one of these funds, and market values total around $700 million for Shopify. Wall Street analysts also have 9 strong buys, 15 buys, and 11 holds for Shopify, which I think is fair right now considering the stock dip, their strong brand equity, hyper growth in revenues, and them being a key player in the e-commerce space. All in all, I will acknowledge the fact that Shopify shares are quite expensive right now, but for those of you who are willing to shell out this type of cash to buy shares of a company, I definitely think that Shopify is going to be a great long-term win for any growth-oriented portfolio, especially considering the current 15% dip in share price that we're seeing on Shopify's stock, considering the fact that this is a company that's growing their revenues extremely rapidly year over year, and they've also been consistently beating revenue and net earning estimates over the past couple of quarters. If you're enjoying the video up to now, make sure to drop a like, it really helps the channel out, and also consider subscribing and hitting the bell button to be notified of new and upcoming investing content. With that said, let's get right into the second stock for today's video. All right, moving on to the second stock that you should look at buying into during this stock dip. We have a company that I've actually mentioned on the channel around a month and a half ago that operates in the cannabis industry. And I'm bringing it up once again because this truly is a great long-term hold in the cannabis industry, being TruLiv Cannabis, ticker symbol TRUL.CN in the Canadian markets and TCNNF over the counter in the United States. As we can see from their stock chart, TruLiv Cannabis has seen roughly 12% shaved off of their recent highs in only around 2 weeks, bringing it back down to a share price that should absolutely be capitalized on for growth in 2021 and beyond. Let's take a look at this company's financials. So as we can see, massive revenue growth year over year since 2018, and now over the trailing 12 months, revenues of $367.244 million, which represents a 45.25% revenue growth over the 2019 calendar year. Trulieve is also highly profitable at $178.033 million in net revenues in 2019, and now over the trailing 12 months, this figure amounts to $126.361 million, both of which are absolutely fantastic considering that this is an industry where most competitors are actually posting massive net losses as they scale their operations and attempt to capture a larger market share. Speaking of market share, Trulieve Cannabis is the fourth largest cannabis producer in the United States in terms of revenues, following Curaleaf, Green Thumb Industries, and Cresco Labs. But in Florida, where this company is based, Trulieve currently has a 53% market share of the 4-week moving average for cannabis flower sales. That's a large portion of the Florida market, where the company without a doubt dominates the state. Alright, now aside from the fact that this company has been posting extremely nice financial growth over the past couple of years, and the current stock price is at a nice discount, what I'm most excited for, which are going to allow sustained momentum for this company, are the catalysts surrounding acquisitions that the company has been doing recently, as well as some political catalysts for this industry as a whole. First of all, with Joe Biden having now been inaugurated as the 46th president of the United States and the Democrats now controlling the Senate after the Georgia senatorial elections, this now gives the Democratic Party control over Congress and the White House, which should help Harris and Biden move forward with their federal cannabis legislation plans. Now, this is not going to have an immediate impact on Trulieve's sales or anything, but it will open up the discussion for more states to start legalizing recreational adult cannabis use, thus increasing sales over time for a company like Trulieve that can continue penetrating more states and reaching more customers. Trulieve also recently completed the acquisition of PurePen, which owns the Moxie cannabis brand that is held in 92 wholesale and retail locations across Pennsylvania, and it's estimated that the Pennsylvania medical cannabis market is set to reach $1.1 billion by 2024, exposing Trulieve to a massive market full of revenue growth opportunities. If we take an even more macro view of the cannabis industry in the United States as a whole, which by the way is by far the largest in the world, we're looking at tremendous year-over-year growth over the coming years to reach $24.07 billion by 2025. As a leading company in the American cannabis space, this is extremely positive for Trulieve and its shareholders. Their balance sheet is also fantastic for a cannabis company, with $786.178 million in total assets and $381.625 million in total liabilities, all of which are green flags for me. Honestly, I see nothing but positive for the American cannabis industry as a whole over the coming 5 to 10 years, and even more specifically for this company in question. What are your thoughts on Trulieve Cannabis? Are you jumping on this opportunity to buy shares at a discounted price point? Make sure to let me know down in the comments and smash the like button if you haven't already. And finally, the last stock in today's video, sort of as a quick bonus here, let's take a look at GoEasy, ticker symbol GSY, on the Toronto Stock Exchange. Once again, this is a stock that I've mentioned on the channel several months back now actually, and it has had a fantastic run over the course of 2020, but honestly, this company has proven to be extremely resilient to the economic impacts of the virus, and I believe it will continue to soar well past $100 per share in 2021, making it a great opportunity to buy in now. The stock has dipped just above 10% since its peak 2 weeks back and is still valued quite nicely actually at a forward price to earnings of 10.95, which is really nice, especially considering that the stock has ran roughly 300% since March 2020 lows. GoEasy's financials are also fantastic, with nice and steady revenue increases year over year since 2016, and as of the trailing 12 months, total revenues of $654.239 million, making it their best year ever by roughly 6%, with net income climbing by almost 30%. This is the type of growth that you want to see from a growth stock whose product offering is increasing in demand due to the impacts of the illness. The company's balance sheet is also great, with current assets of $1.134 billion and current liabilities of only $182.704 million. Keep in mind that this is a subprime lender with terms that are typically quite short, less than a year, so that's why they have such high current assets that don't appear as cash. On top of all this information, GoEasy has also been consistently paying out a dividend for now 16 years and has been raising these dividends for now 6 years, making it a Canadian dividend aristocrat. They currently have a dividend yield of 1.93%, which isn't the highest, but considering that this is very much a growth play, an almost 2% dividend yield is very well received in my books. So yeah, GoEasy's Q4 2020 financials are set to be released in the first half of February, and I expect the company to once again beat revenue expectations as they've done over the past 2 quarters, and I believe that at the current share price that's still below $100 per share, over 2021, we could very well see a nice 25% upside on this stock. That was just a quick update sharing my thoughts on GoEasy. Make sure to let me know your thoughts on GoEasy, TrueLive Cannabis, as well as Shopify down in the comments. I really hope you enjoyed today's video. If you did, smash the like button and subscribe to the channel if you want to be notified of new and upcoming investing content. Also, if you're a new or intermediate investor, make sure to check out the links down in the description to resources that I use and recommend in my investing. If you open up a Wealthsimple trade account right now, you'll actually get $25 for simply signing up and funding your account with $100. So on that note, thanks a lot for watching today's video, and I'll see you in the next one.